Greetings, I'm Andrew Ludwig, and welcome to Black Onyx Alternative Investments, where we bring you face-to-face with South Africa's most talented boutique asset managers and industry stakeholders. Why do we do this? Because we believe that you, the investor, deserve to be better informed so as to achieve the best risk-adjusted returns. Today we are speaking to Cy Jacobs. He's the co-founder of 361 Asset Management, which was established in 2004. Cy, thank you very much for joining us. We look forward to learning a bit about your fund. Tell us a bit about your background and how you got into alternative investments.
Absolutely. So I've always had a love for the market from when I was a teenager at school. Myself and my best friend took to investing in the JSE very early on, probably at the age of 16. He had a father who had quite a large share portfolio, and we learned the tricks of the trade at school. Initially started our own portfolio, which never turned out so good. By 1987, we were caught up in the big crash, the Blue Monday, as it was known. And from that day on, always been fascinated with everything. So went on, did a course in obviously stockbroking, but actually became a chartered accountant. Did my articles and met somebody, my current business partner, Steve Lips, met him during articles. The end of articles, we went on to become private client stockbrokers at HSBC, sold our business a few years later to Investec. When joining Investec, loved the idea of hedge funds, tried to play around a little bit at Investec. They weren't big lovers of the strategy, and we launched our own company in 2004 to effectively start a hedge fund business.
Tell us about your firm and some of the funds and strategies that you represent.
So the firm started in 2004. Myself and my current business partner, Steve Lips, came both out of Investec. We just had a philosophy. We want to look after private clients in a very flat structure. We wanted to manage their money to the best of our capability and not tie ourselves up in red tape or bureaucracy of all the bigger institutions. We set out just to look after a handful of clients, and this has obviously grown into a much larger business. Today we have some 18 people, just short of 20 billion in assets under management. Approximately half of that is hedge funds, the balance being long-only money. And the strategies are really simple. We have a long-only strategy, which effectively is an equity strategy, which is our best selection of equities, which we hope over time to beat the market. And then we have a hedge fund strategy, which effectively culminates with the exact same portfolio from the long-only side. But then via our research techniques, we come across many short ideas which effectively supplement the long-only portfolio, also bringing down the risk of that long-only portfolio, and do various option strategies, etc., to bring down that risk further. So really a simple approach, one investment process, a simple, really flat structured business with a small amount of people, no hierarchy, no titles in the business, and in fact not even any marketing people. So all business really comes by word of mouth, by people hopefully trusting our performance and being there for some time, and really having sown the seeds of some great performance over the years.